Now that I've explained that. Now, I'm going to also explain. I showed us how to use market and limit orders yesterday in the spot trading. I showed us that market means that we are buying the market value. For example, if I was to buy BTC long right now, the market value of BTC long is 105,670. As you can see, it's fluctuating. That means I'm buying market. If I were to use a limit order, let me use a limit order now. I'm going to place a trade with a limit order right now so that we can see how it works. Let's say, for example, I wanted to buy a Bitcoin contract when Bitcoin reached $100,000. I'm going to put in 100,000. That should be $100,000. Yeah. Then let's say I want to buy another $1,000 at that point. So basically 0.03 is $1,000 at 100K. If BTC was 100K, for it does still 3x for Bitcoin for the $1,000 to work as though it is $3,000. So if I click long, we'll click long right now. If we come here to orders, we can see that the trade is waiting to happen. So immediately Bitcoin hits $100,000, the trade will be placed for me automatically. That's the way a limit order works. And it works, I'm going to change it back to market. And it works vice versa if you want to sell. I'm just going to go into that to teach us how to sell. If you wanted to sell this contract, you click set TP. Set TP / SL. That's set take profit / stop loss. That's what that means. Now, let's say, for example, Bitcoin was going to get to $112,000. You can see my profit for this trade will be $129, as you can see on the screen. For the current trade I have live, if Bitcoin was to get to $112,000, my profit would be $129. If I click confirm, that means that automatically, when Bitcoin gets to that price, whether I'm with my phone or not, it will take me out of the market and take my profits for me. So does stop loss works the same way, but we are not really going to be using stop loss, but I'll show you how it works. Let's say I was so scared, which we don't use that strategy, but let's say I was so scared that if Bitcoin reaches $100,000, they should sell my Bitcoin for me. I don't want to do again. So okay, this is it. Let me put it at $100,000. $100,000. So basically, if Bitcoin were to hit $100,000 and I set a stop loss, I will lose $230. But we don't really use stop loss in our strategies, so I'm not going to be teaching that concept. Now, still on Bitcoin long leverage, it's broken down into many categories. I explained the principle of dollar cost averaging. Now, this is where that comes in. I want us to please pay attention closely. Please pay attention closely to how dollar cost averaging works. Leverage trading Bitcoin here. So I have a perfect example here, and I'm going to show us how it works. Now, you can see on the screen, assuming I invest in Bitcoin with $1,000 and I divided my capital into 5 places of $200 each. Now, if I bought Bitcoin at $20,000, $40,000, $60,000, $70,000, $100,000 with each $200 batch, remember we divided the $1,000 into 5 places. You can see at the end of this mathematical calculation, our approximate entry will be $43,103 per Bitcoin. Which is very beautiful. I mean, look at you bought your last purchase was at $100,000. You also bought at $70,000. You also bought at $60,000. But your average entry is $43,103. That's the concept we are going to be using. That's the concept we are going to be using here for dollar cost averaging. Now, assuming again you had $1,000, your first purchase will be $200. You buy your $200 worth of this contract like I showed you just now, and you make that purchase. You have 4 batches waiting. Now, remember, I'm assuming you had $10,000 normally. $9,000 is your MetaMax. I hope you remember. $9,000 is your MetaMax. $1,000 is your Bybit. The $1,000 in your Bybit is now broken down into a $200 batch. Good. Now, the first set of $200 is used to purchase Bitcoin at the current price. And now let's say you enter Bitcoin at my entry price here, 107,668. That's the price you purchase Bitcoin. That was your first purchase. Now you are not going to want to, let's say Bitcoin drops to 100,000. Okay, for example, now let's even use the current price of Bitcoin. Bitcoin now is 105,697, and I purchased at 107,668. At this point, I'm not going to want to buy again. Why? That is called micromanaging. You have to have a principle where maybe you manage your risks, and based on Bitcoin is above 100K, I would suggest something like buying maybe $10,000 apart, meaning your next purchase at this point could be $97,000, meaning you bought your first purchase at the entry price right there, 107,668. The next purchase that you make it at $97,000. Then if it drops to $87,000, you make your third purchase as $87,000. If it drops to $77,000, you make your next purchase at $77,000. If it drops to $67,000, you make your next purchase at $67,000. When you combine your different entries, you are going to have an average buying price, and your trade is eventually going to be profitable. Now, it doesn't happen that you have to buy again and again and again. I can make my first purchase at $107,000, and the market goes to $110,000, and I sell and make my profit. For example, we saw when I was showing us take profit that if the market goes up to $112,000, I make $129. It's not going to really be that the market will be going down and going down, but we are risk managing here. So we are gathering all the risks, and we are managing it. So we break our money that we have on Bybit for trading into different batches. Now, never get emotional. And let's say, for example, you got emotional and you used up your $1,000 on Bybit and bought all your purchases at, let me say, for example, you made your last purchase at $102,000, and you did not stick to the principle. You just made all your purchases, everything is above $100,000. Don't go to your MetaMax and bring in more money. Otherwise, what is going to happen? You are going to turn your portfolio into a black hole. What do I mean by a black hole? You could end up bringing all your money from your MetaMax, and because obviously by making that kind of mistake, you are poor at managing your portfolio, you bring everything. Most likely, if you are that emotional, you are going to lose your whole money, and you are going to even lose the whole $10,000, and your money is going to go to zero. So that covers the concept of BTC long for leverage. Like I said, we are not allowed to use more than 3x. In fact, it's advisable you step it down. Use maybe 2x, but like I said, I can permit us to even use 4x, but that covers it for BTC long. Now, the next thing is BTC. Why is this class majorly focused on BTC? I'm going to go into altcoins, because there's a strategy for altcoins which is kind of different from this one. But Bitcoin is something that is safe. It's something that by investing in this asset, our risk is already managed for us. So I'm just going to go into BTC shorts from here now. Now, I want us to note this. We cannot place a BTC long and BTC short at the same time on Bybit. It's either one or the other. It's either you are in BTC long or you are in BTC short. You can't be in both. So I'm already in BTC long. So I'm not going to be able to place a BTC short trade, but I'm going to show us how it works. Now, everything I told you on how you buy BTC long is how you buy BTC short. Just that instead of clicking long, you click short. What does short mean? Short means that if the market is going down, you are going to make profit. I'm going to enter a short trade for the purpose of clarity when I get into trading altcoins, so that we can see a short trade plays live. Now, like I said, just the exact same way you buy a BTC long, the exact same way you buy a BTC short. Now, for BTC short, it's a different mentality. Why? We want to limit our risks as much as possible. So it's either we change our leverage to maybe 2x, or we can change it to 1.5x. Why are we reducing the leverage? We are reducing the leverage because in crypto, the upside is unlimited. Now, if Bitcoin were to crash, we can say, oh, it's crashing to 60K, it's crashing to 50K, it's crashing to 80K. But the upside, BTC could be going to $1 million. It could be going to $10 million for one. And you don't want to be caught shorting the market, and you are investing all your life savings into shorting the market. It may not work out. So when you are shorting a market, have the mentality that you could be very much be wrong. But there is a time to short the market. Bitcoin is currently above $100,000. So probably now you could risk shorting it. You could risk shorting it, although I would say the time for that has already passed, because if I'm going to open the graph right here, I'm going to open the graph right here for us to see. This is, if you go back to the candlestick patterns that I taught yesterday, when it was, let me use the daily chart, when it was $111,999, I want us to look at that area, $111,999. We can see clearly that beside that green candlestick, a large red candlestick appeared. That showed that basically it meant that the uptrend most likely is over. And the sellers, the bears, they have come into the market and they are ready to take the market down. You can see that this was yesterday's class. It was called the bearish engulfing candlestick pattern. What that means is that daily candlestick, the red one, completely destroyed the green one before it and almost got to the end of the green one just before the one before it. Now, that's just a way to identify it. So if you wanted to short the market, my point is, once you saw that candlestick appear, you could have shorted the market and you would have made your money and left around $100,000. Around that range, maybe 102, 103, you would have left the market around that range. So shorting it now might be a bit not it. So I'm going to go back to futures right here. So yeah, so to short Bitcoin, reduce your leverage to 1.5x or 2x or 2x maximum. Don't go beyond 2x when you are shorting Bitcoin. If you were to short Bitcoin right now, your liquidation point will be $200,000. Basically, if you are using 2x, your liquidation point will most likely be around, maybe not $200,000, maybe $150,000 or something like that. So your liquidation point will be around $150,000, which is safe. So like I said, it's shorting the market, give room for the fact that you could be wrong. So you want to just use a limited capital. Let's say you take it that from your $1,000 capital in Bybit, you are only willing to risk $500 to this short strategy, no matter what. You are not going to go beyond that. If the market is, that's why you manage your capital well. Maybe what you may even do, normally for the long strategy, you are using $200 per trade. You broke your money down into 5 places. For the short strategy, you break your money down into, let's say, 10 places, $100. And out of that, in fact, out of that 10 places, you are only willing to risk $500 to short the market. And you are going in with $100 to short. That should be it. I'm going to place live short trades for us so that we can see how it works. But that's basically it for Bitcoin short. Now, I'm now going to go into how to short how to long and short an altcoin. Altcoin basically means a coin that is not Bitcoin. As you can see clearly on the screen, I am currently longing a coin called Solana. As you can see, I'm in profit. When it comes to longing, you are investing in that coin to go up. When it comes to longing an altcoin, don't ever use more than 2x at a maximum. Preferably, I stay in 1.5x. Why or 1.2x? Solana is a bit up there. I think it's in the top 5 largest cryptocurrencies. So it gives me the safety of even using 1.5x. But sometimes I use 1.2x for other coins. That is basically risk management. Why do you do that? Because altcoins are so volatile. They are so volatile. You cannot afford to use 4x for an altcoin. Let's say, for example, I purchased this Solana at $150. If I bought it at $150 and I used, let's say I used 4x, 5x, my liquidation point would be $130. And guess what? Altcoins are so volatile that it's most likely going to hit my liquidation point and I would lose all my money. But as you can see on the screen, I'm using 1.5x. So my liquidation point as at now is currently $50.8. So that's basically is safe. For me to be liquidated, the Solana coin has to crash basically times 3 of its price, which is very rare. But also know that when you are longing an altcoin, like the trade I have on the screen, altcoins are so risky. They are so risky. For example, this Solana, there was a time it crashed to $8. So basically, what do? You limit your risk. Assume you have $1,000 in your portfolio. I'm assuming. Only be willing to risk $500 to trade the Solana. Basically, you break your money down. For Bitcoin, I told you to use $200 per trade if you have $1,000 in your Bybit portfolio. If you had $1,000 in your Bybit portfolio, for an altcoin like Solana, your first purchase should be about $50. You don't want to use $200 per trade for an altcoin. Why? It is so risky. The altcoin is more volatile than Bitcoin. You basically need to use as little of your money as possible. And because it's more volatile than Bitcoin, the benefit is that its movement is faster. So with little money, you're going to even make more profit. For the purpose of this class, I'm going to be placing a live trade for long for an altcoin and show us how it works. So basically, I'm going to click BTC USDT right here. I'm going to search for an altcoin that I feel would go up from some technical analysis. Let me look at the graph of this coin called Fatcoin. This coin called Fatcoin is in an uptrend. So for the purpose of this class, I'm going to place a trade in the Fatcoin. So I'm going to close the graph right there. And for this is what I'm looking for. And I'm going to place, let me say, I want to buy 400 Fatcoins, which is equivalent to $494. Now, I'm going to increase my leverage to, let's say, 1.2x, because it's a volatile altcoin. I don't want to use high leverage. I'm going to save that right there. I'm going to click OK. I'm going to click long. I'm going to click long right now. I'll click long. You can see the trade has been placed. You can see my entry price is 1.2. The contract price that tries to keep up with the price of the actual coin is 1.23. My liquidation price is 0.2. As you can see, my liquidation price is so low. So it's very easy for me to be able to manage this kind of trade. Like I said, you're going to be using the principle of dollar cost averaging. So let's say, for example, I wanted to make a second purchase. I'm going to be making the second purchase at, let me say, this coin is so volatile. It's so volatile. is basically a meme coin. So volatile. So this coin probably has to drop 50% for me to buy again. Basically, that's how serious it is. So I would say my next purchase would be around 0.6 if I were to buy again. I'm going to click the contract of the coin. Basically, this is the contract of the coin. My position size is 400 of the coin, which amounts to about $410. My entry price is there. My mark price is there. My unrealized loss is there. My realized P&L, which is the funding rate, is there. My IM, which is initial margin, is there. MM basically means they didn't add $3 from your money. They basically did not use all your money to purchase the contract. They left $3 there for you. That's basically it for long of an altcoin. Now, before I get into how to short an altcoin, there's something I want to add. I'm going to go back to the BTC contract. I'm going to type the BTC contract right now. I'm going to click the BTC long. I'm going to click the contract right now. Where we can see IM $1,077. I'm going to click that arrow pointing to the right beside IM $1,077. Good. Now, here you can add to your margin. What does margin mean again? Margin means the capital you are using to trade. You can drop the liquidation price. You can reduce it further. If you feel you don't want to buy yet, you don't want to make your second purchase using the dollar cost average strategy that I've been emphasizing on, but you want to reduce your liquidation price, you feel that 72K is not far in sight. So let's say, for example, let's say I want to add about $1,000 more to the contract. I'm not buying again. I'm just dropping my liquidation price. Now we can see that the liquidation price has dropped to $38,965 from $72,000. So this even makes it more safe. It now basically means Bitcoin has to crash so much for me to lose all my money. And for Bitcoin to crash to this price, it's almost virtually impossible. But this will basically manage your trade for you. So basically, you can add to your margin and drop that liquidation price. That liquidation price is not something that is static. It's something that you can drop. And you should always be looking for how to manage your investment. Now, if I switch to decrease basically means I can reduce from the margin. Let me see if I'm able to collect $200 from the margin. Basically, this means I can reduce. Okay, I don't think I can remove anything from it right now. But this basically means I can reduce from my capital. Now I'm going to go back into leverage shorting. How do you short an altcoin? How do you short an altcoin? Each of these things I've been saying, they have a different mentality for each strategy. Now, when you are researching, I personally do a lot of research on this. You are looking for an altcoin that is a bit overextended. I'm going to use Trump as an example, this Trump meme coin. I'm going to use it as an example so that we can get the understanding of how to short a meme coin. I'm going to go into the graph. I'm going to go into the 1 month graph. Or let me go into the daily graph. I'll just go back in time. I guess we can see the chart on the screen. Now, when I'm thinking of how to short an altcoin, I'm looking for altcoins that are overextended. These meme coins, they are practically useless. So for them to be so high in price, it means that it is just a temporary hype. It's just a temporary hype around the project. So I know that after the temporary hype is done away with, the coin is going to crash so bad. Now, Trump coin, if you look at the screen, it's about $10 now. We can see from the chart that at some point when it was released, it rose up to $83. Just look at the difference between $83 and $10. Now, if we got into when Trump was listed, it listed around, I see the exact price right now, but I think that's okay. That should be close to $19, $17 or so that I listed on Bybit here. Now, let's say, for example, I'm going to short an altcoin for us live to see how it works, but I'm using this as a case study. Let's say, for example, we came in at, because we can't predict the future, in the moment when it was rising from $70 to $83, we will not have been able to know the top. That's a fact. But what do? Let's say it has multiplied in price by times 3. So it had gone from $17 to, let's say it rose to $41. Now we can see that it has basically gone up almost times 3. What do? We are going to use 1x. We are going to change this leverage here, change it to 1x. Why? The coin is so volatile. It is so volatile. If we use anything beyond 1.2x, the likelihood of liquidation is so real. So to manage our risks, we are going to use 1x. In using 1x to short a coin like this, let's say when it was 40, let's say we got in at even $30, it rose from $70 to $30, and we came into short. Remember, it kept on going up and even went to $83. Let's say because this is a meme coin and we know the risks involved, we earmark $300 of our portfolio. Remember, we are talking about $1,000 portfolio here. We earmark $300 of our portfolio to short this coin. We are going to divide that $300 into a batch of 6. Our first batch would be $50. So let's say, for example, we purchased this meme coin, shorting this meme coin, knowing that the hype around the project is temporary, it will not last. As you can see, it kept on going down, and at today's price is $10 for one. Now, let's say we bought at $30. We bought again at around $50. Bought again at $70. Bought again at, let's say we only bought, we only made 3 purchases at $30, $50, and $70. And we divided our $300 into 6 batches of $50. So we did not use all of our capital for this trade. We simply used 3 batches of our capital. Now, we will have an average price here. I think the average price could be about $50-something. That should be the average price. Now, market started crashing and crashed all the way to $10. At $10, we are most likely going to have about 5 times our capital. So that will be 180. That will be $180 times 5. $180 times 5. That's basically about $900. So we are going to basically have, I don't know whether that's about $900, but we're going to have times 5 of our money in shorting this coin. So now I'm going to place a live short trade so that for the benefit of our understanding, there is an overextended altcoin that is practically useless to me, that is just moving about the AI hype. I'm going to show you us let me use the 1-day graph to show us this. Remember, each candlestick here represents 1 day. We can see that in recent times, this coin has risen from 0.4 to 2.5 and is currently at 1.8. Now, when I look at this chart, what I see is that the market had risen up for a while. And the market is now consolidating. The market is going through a period where people that invested at 0.4, they seem to be taking profit. They seem to be taking profit in this range. You can see this part shows that it went up a bit. And if you now look at these prices, they look like a ranging market. We discussed the kinds of market yesterday. A trending market and a ranging market. Of course, it could go up more than this, but we can come in here and short. Basically, the same principle of using about $300 from our $1,000 portfolio, because we know that if we are wrong, the whole $300 will be gone. That's why we limit ourselves to $300 from a $1,000 portfolio. Now I'm going to come in. I'm going to short this coin with just 1x. just 1x. Because like I said, these are meme coins. These are volatile things. You cannot be using anything like 4x, 5x, 6x, 7x. You will lose all your money. I guarantee you, you will lose all your money if you do that. So now I'm going to use I'm going to use about $300 from my portfolio here. Okay, $300. Let me use about 200 virtuals. I'm trying to see what is equivalent. Okay, $200 is equivalent to $367. Because it's just 1x, it's going to work as though it is $367, but it's going to make money for me as the coin is going down. As it's going down. When you are spot trading, that's not leverage trading now. You can never invest in the market to go down. When you are leverage trading, you can invest in the market to go down. So I'm going to click short right now. I'm going to click short right now. And basically, I've placed the trade. As you can see, my liquidation point is estimated liquidation price is 3.66. What does that mean? If the market should rise up to 3.66, I would lose all my money. I will lose all my money. But if the market should keep going down, I'm going to click set TP, or yeah, I'll click that. I want to show us if the market should drop to $1, my profit will be $167. You can see $1 is not far from 1.8. But this coin is so volatile that even though my capital is just $320, it's going to give me $167 if I take profit at this level. Let me just set take profit so you see how it works. Okay, you can see on the chart there, estimated entire position 1. Now I'm going to also show us, before I go to the next major strategy, if you wanted to close this trade, you just click close buy. If we click close buy, you click maybe 50% or 100% of your money, click confirm. It's on market and limit. Market means you exit at the current market value of the coin. Limit means you set a predetermined price. So I'm going to, so we are done. That all those concepts are the concepts of how I leverage trade. Before I leave here to enter the next strategy, which is the loan strategy, I want to show you that this is not a theoretical thing. I'm going to show you the profits that I've made from leverage trading here. You can see these are profits. This goes so far back, but you can see all what we can see. These are profits. Like I said, I take the demo account as though it's a real account, because it trains me. I'm an asset manager. It trains me to manage the money of my high network clients. And if we keep going down, we are going to see the profits that I've generated over time. Like I said, I've grown this portfolio from $50,000 to $60,000 in the past 2 months. So before I proceed further, I want to check on us. And yeah, can everyone hear me and see me?
Yes, please.
Yes.
Can everyone see me? Okay, we have some. Okay.
Yes.
Everyone can see me.
We can.
Are we following everything that has been taught so far?
Yes, I have. Following.
Okay. Other people, I hope you guys are following.
Yes.